Let's welcome on board Nischal Maheshwari as well and talk about what he's making of the market right now. Nischal, hi, afternoon. Your thoughts on the markets has been going good. Seems like some consolidation could be well on the cards.
Thank you. Thank you for having me. Good afternoon to all your viewers. Yes, I think post the recent RBI announcement, basically, where there was indication that the policy continues and at least there's no rate cuts on the horizon. I think market is pretty steady. Seems to be consolidating around the current range, and we continue to see. I think the next triggers would be the current quarter results and monsoons possibly.
Okay, so that's the take coming in. But in the meantime, taking a look at what's buzzing around in the trading session, I think it continues to be metals all the way, which are doing quite well. And you also have, of course, the real estate names and IT as well, which is holding up quite comfortably. And then select names, Century Textile, like a Soba Developers. These are the ones that stand out apart from the private banking names. But Nischal, what's the view on the private banking section? If you had to make a bet on the top pick there, what would it be? Would it be ICICI Bank, Axis, or the good old HDFC Bank?
So private sector banks has been our favorite for some time now. We had preferred the SFBs previously, but I think the larger banks have corrected quite a bit, and that's why we prefer the large cap banks now. But our order of preference there is obviously HDFC Bank. Yes, I understand basically that it'll take some more time basically to HDFC to sort it out in-house, but I think in the short run, I think the valuations are favoring it. So that's why we believe HDFC as our top pick. And I think a smaller bank, RBL, looks very interesting to us in the private sector space. So these are the two banks in the large and the mid cap category which we are looking to recommend to our clients.
Nischal, what about Paytm? Could that be a turnaround story of sorts in the making? I know it's been completely down and out, and rightly so. The news flow has been such. But what next for Paytm at 400 thereabouts?
I think at the moment it's a best avoid basically because there are a lot of other opportunities out there. Paytm needs to get its house sorted. Yes, I think the Paytm banks has now got sorted, but I think the model still remains to be a bit confusing. So where is the revenue is going to come from? How's the outlook? I think these are two situations basically which very little clarity there. So these prices I would avoid because I think there are a lot of other interesting plays which are available and obviously much cheaper.
Point taken. So that's a view on Paytm. Still some time away, that recovery. For now, the market is not seeing any buying on dips emerge. At the moment, we're still around the 2200, 640 mark. So from the highs, there has been a considerable downtick. And even in terms of stock-specific moves, there are some stocks which are getting a lot under pressure. Having said that, take a look at Hindustan Zinc. That stock is clearly firing away in the trading session. I think it was already up 8-9% earlier. Now, in the last few minutes, there's a further perk up, and that stock is now sitting with a gain of a good 15%. Hindustan Copper still higher by 8%, and MOIL is also up 5.5%. Kunal, within this entire pack, and especially on the charts of Hindustan Zinc, what would you recommend the investors who are already holding the stock?
So bullish on the metal pack, and I would still believe that many of these stocks have just started to show signs of a breakout. So Tata Steel, I think, has managed to break out 160 mark after, I think if I'm not wrong, 1.5 odd years of consolidation. Vedanta is an underperformer. Hindalco has done reasonably well. That's a stock which has been a lot more consistent. So I think there are a lot more better charts, metal pack which one could be looking out for. So Tata Steel is something which I would be bullish. Sale, I think around 150 mark could be something which you can look to have a bullish trade from a medium to long term play. Hindustan Zinc, after 2 days of strong ferocious up move, 2 weeks of strong up move, I think the risk is now getting a lot more skewed because the indicators, for example, the RSI is almost at 88-90 for Hindustan Zinc at current levels, which means momentum can continue, but initiating a fresh buy could probably be at a very skewed kind of a risk reward.
Right. Okay, Kunal, before we let you go, let's get your BTST trades as well.
So I'll go with two buy calls. Capacity Infra is something which I recommended, I think last week, around 275, 280 levels. The stock has now crossed the 300 mark. Looks attractive. So I maintain the target of 330 on the stock. Stop loss could be traded 288. And Foods is something which I've been bullish on. The stock is heading towards a breakout for the 208 plus level. So would suggest a buy with a target of 228. Stops at 200.
Okay, Kunal, we'll let you go on that note and see you tomorrow morning at 8 a.m. Let's also get in a sense of where the volume action is in the market right now. Ansh is here with all the volume buzzers. Ansh?
Yeah, so Page Industries will be the first stock in focus. As you can see in the chart as well, the stock has given a good breakout from its downward sloping resistance trend line, which was intact since start of the year. The stock has also surpassed above 50 DMA along with good volumes of over two times its 10-session average volume. Apart from this, cholesterol will also be in focus as the stock has given a breakout from its reverse head and shoulder chart pattern, touching 6-year high as well. The volume has also spiked to over 5 times its 10-session average volume of last 10 sessions. Lastly, Motilal Oswal will be in focus as the stock has actually given a breakout from its key pivot high of around 1920, touching record high level as well. Also, the volume has surged to over 5 times its 10-session average volume. So keep an eye on the stocks.
Thank you so much, Ansh, for joining us with that quick price volume buzzer list. But in terms of the stock, it continues to be names like even sugar stocks actually managed to show very good gains. Sri Renuka Sugar should come up for you on the screen. Paddy is doing quite well. So a couple of these sugar names, including the likes of Balrampur, Chini, etc., are seeing a massive surge on account of more usage of sugar perhaps being diverted into ethanol. And that's something which is supporting the sentiment on some of these big players of ethanol. Nischal, I'm not sure. Do you look at the sugar pack closely? If yes, how would you recommend investors to deal with it?
So yeah, we do have sugar under coverage basically, but I think it has been a disappointing year for sugar for some time. I think the last 2 quarters they have been underperformers. But recently what we are seeing is basically that the sugar production is better than expected, and that's why I think government is allowing the sugar companies to divert some amount of sugar production to ethanol. And that's why we see these better days ahead for sugar industry, for sugar companies in particular. So I think some of these companies do look good for at these prices, especially Balrampur. That has been our top pick for some time, and I think at these prices one can start accumulating the stock.
393, a good buying price for Balrampur Chini. Nischal, let's have some other stock ideas as well from you. Anything other than what we've spoken about, RBL Bank, Balrampur Chini, that's looking interesting right now at these levels?
So I think some of the smaller NBFCs, particularly I think the SFB, out of the SFB pack, they have been doing pretty well. Basically, if you look at it, the business update which they have come out with, I think spectacular results. One or two of them basically, which we have been recommending to our clients, is Suryodaya. A small SFB basically, it's done very well. Another 40% YOY growth and 16% Q-on-Q growth. So I think that is available less than one-time book. Another company which is dedicated towards SME lending, Ugro, that also I think is doing phenomenally well. Basically around 50% kind of a jump basically in the current year, and next 2 years also we believe basically that it's going to get similar kind of numbers. So there also it is available one-time book. So I think these are some of the stocks basically where these are all small caps, and one can look out as a bottoms-up kind of approach.
But stocks like the sector definitely stand out. What's the view, Nish, on the big up move that we have seen on X side? And there's a classic bull versus bear case scenario when one person is talking about how this could be a complete re-rating candidate, while others say that it's a very commoditized business. It involves high capex, and that's why return ratios are always limited, and that's been the global trend as well. Do you think that the kind of up move that we have seen on the likes of X and Amara are called for?
So we don't cover it, so that's why difficult to really comment on that. But I do know, I think Exide has got a bit of checkered history. So we used to cover it some time back, basically, as far as the R&D is concerned. So that's why not very sure, but difficult to comment at least. I am not on top of it at the moment.
Sure, no worries about it. But in terms of the other movers, you have some of the power stocks are actually coming off. So JSW Energy was under pressure, Tata Power was a bit volatile, and in the recent run-up that we have seen, REC, PFC also haven't participated. Rudramurthy, what does the chart check tell you on the price of REC, PFC? Do you think the best is over and people should perhaps looking out whatever profits they have made already?
No, for me, PFC and REC is now offering a good buying opportunity because having seen those higher levels of around 470, 475, PFC made a profit booking thing and then corrected till levels closer to 360. Now from 360, it made a move towards 400, finding some amount of selling pressure and again now consolidating at these level. So I will be a buyer in PFC levels closer to 380, 385, and I will look at all-time highs again back on PFC, which can be at around 470, 475 region. And similarly, if I see the REC chart, yes, REC also offers to me a buying opportunity on dips. These are two strong stocks, no doubt. From their higher levels, it has made a correction, but I will use a dip in REC to buy. Strong support zones are at around 425, 430 zone. So at current levels where we are very close to the support of 425, 430 on REC, I would rather suggest a buy on strategy both on REC and PFC. So REC is a buy on dip to 425 and PFC on dips to 385.
Okay, that's the or rather move coming in on some of the power financiers. Today, of course, Hindustan Copper, that's the one which is holding up very smartly, about an 8.5% move. And to be fair, it's not just Hindustan Copper. The entire metals pack has been chugging along nicely off late. Vedanta as well is up about almost 4% as we speak right now. JSW Steel holding up. The Tata Steel as well, although they've come off quite considerably from the day highs, but in the green nonetheless. Nischal, would you have a view on the metals sector right now and whether there are any investment opportunities here?
So I think metals last quarter has been, I think, a bit of a issue because you have one side the raw material costs going up and the other side the price is not reacting to favorably. So I think this quarter results are going to be a bit of a challenge for the whole metal pack, especially ferrous. We believe there is going to be contraction of margins. Going ahead, I think there is some hope as far as China is concerned. And that's why I think we are seeing some run up in the metals. I would be cautious at these prices, rather actually take profits because we still continue to see strong China dumping happening. And that's why the domestic players have not been able to take price hikes. So I think a good time to take profit in the metal pack.
So the recommendation is book profits in select metal names. But separately, in terms of the stock-specific moves right now, well, good amount of momentum can be seen on Anand Wealth. Motilal Oswal was, of course, doing well as well, 12% higher. And in Castrol India, Century Textiles, Vedanta as well as actually pulling up. So some of these names deserve mention. But Nischal, I would want your view on the FMCG pack as well. But before that, let me take it across to the experts whom we spoke with earlier as to whether there are genuine signs of a recovery in rural demand as of now, or is it still very limited to urban consumption? Take a listen.
We do expect growth to be in the low to mid single digits in the first half of the year. Even though there are some tailwinds with regard to a good Rabi crop, etc. But overall, the demand situation remains muted. My concern going forward is not so much on the top line, but on the margins.
An early summer that has come in, I think, is definitely positive for a lot of categories. However, there is definitely a headwind from a confectionery and chocolate space where cocoa prices have soared. Most other discretionary products, we are seeing an active participation of brands in trying to even correct prices so that they drive consumption. So I think rural, don't write off rural anywhere. I think it's just a season away from getting back into action.
Rural recovery is still awaited. My sense is in FY25, with a normal monsoon forecast and local players competition getting anniversarized, I would say that rural recovery can potentially start from Q2 FY25. Because of the gross margin pressure coming back, consumer companies will take a price hike. We have already seen in cocoa and coffee, a lot of players thinking of price hike. They have already taken. So that will also aid the overall revenue recovery.
Nischal, wanted to understand what you make of whether or not FMCG, not urban, but the rural demand could see a recovery. We were just chatting with SkyMed today and they're pretty hopeful of a normal monsoon and that they think is going to aid the rural recovery coming in bits and starts. One has seen a GCPL, Marico as well, post recent Q4 numbers and hints of rural recovery clearly in there. But would you say it's time to invest just yet?
I would actually want to wait and see that there is strong rural recovery happening. Our recent channel checks, we do it every quarter. And this we specifically did only for the North India because I think North India is where most of the FMCG companies have highlighted that the demand is a bit more poorer than the other regions. And it doesn't seem to be indicating any strong recovery happening in the rural side. And the one reason which has been cited very strongly is high inflation in the rural areas. And I think that's eating into the rural recovery. So I would wait for this inflation number to actually come down more on a more sustained basis before actually going out and investing into the rural focused stock. Yes, current quarter numbers would be better because I think the companies are taking price hikes. So their margins may go up, but I don't see a volume improvement happening.
That's a take on FMCG and consumption. Just 2 minutes left for the trading session to end. So on that note, Nischal, we let you go. But
if you like this video, then like, share and subscribe to ET Now.